Hello everyone, it's Wednesday, July 29th. It's just about 20 minutes after the regular session close, and I have another live trading video from Trader Jim. Jim was really gracious to show his live trading account at the end of the video. Be sure to watch it because he explains his thoughts on money management. It's really important that you see this. It makes sense. There's also a really great discussion on the higher time frame filter in the auto trader and how Jim is using it on this 450 tick template. Now, certainly I'm not criticizing Trader Jim and his settings in any way. You can't fault anybody using settings where something is working. If it's working, it's great. And it goes to show that different traders look at things differently, and that's okay. It's all good. There are 100 ways to use our higher time frame filter, as I have demonstrated and Jim has certainly demonstrated. And so again, I'm showing my chart here. I have slightly different settings based on, my knowledge of the auto trader, and the way I look at trading is different than Trader Jim, but it doesn't mean that he's wrong and I'm right. It has nothing to do with that. What it has to do is it shows the versatility of the auto trader and the immense possibilities to come up with profitable trades. Now, my thinking behind this is if you have a smaller sensitivity, you'll get red bars sooner and enter the trade quicker. And as I pointed out, that most of these trades seem to go beyond 20 ticks, so I raise my targets to 20 and 45 ticks. Now, I didn't realize it, but I have precision trend exit set at 1. And so I'm not sure why these first 3 trades exited so close to the entry here. There's 3 in a row. In spite of that, it was still good for about $20 a trade, but I had several trades that were entered and exited really close to each other. Fortunately, they were all profitable. And then finally, we got into this period of time here, and you can see that clearly there was a lot to go here. First and second target were hit, and then another trade here finally brought me to my target, which I set at 650, a little higher than Trader Jim's. So it all worked out, albeit it took more time. And this is traded in sim, as you can note by the red border. So I am testing these settings before I were to trade it live. I think what I may do is put this back to a setting of 1. 0.8 might be a little too tight, and I'm going to uncheck the precision trend exit. I'm going to set this to 0 because I'm not sure why this is exiting so close to here. It might be because of fast market or running in sim. I'm not sure. But in any case, this worked out, and Trader Jim gives a good tutorial or explanation of this higher time frame, how it works. So let's have a look at Trader Jim's live video for today.
All right, July 29th, FOMC day. So today I am not trading any of my semi-automated charts until, at least not until after the FOMC. I'm also not trading the Super Renko 6 filtered by the Step MA in full automation. I'm going to put this one aside for now. I am trading this chart. This is the 450 tick filtered by 1500. It had a losing day yesterday after having a 16 day in a row winning streak. So I did watch the video yesterday. Randy had some very valid points as far as targets, as far as the precision trend sensitivity, all very valid. However, I just feel that the minute we change anything in the template, even what looks to be a small thing, it is no longer the same template. So this template so far has been good, so I did not change anything. I'm going to run it this morning, and since I'm not trading anything else, I will have a narration going and try to explain what's going on. I also have that 10-minute chart that I've been following over the past couple of weeks running as well, so I'm going to show that. when it's done, but let's focus on this. Very often this chart is done quickly, so I'm hoping things will not drag out. For better or for worse, either it's going to hit its target or the daily loss limit. So let's wait and see. Okay, so here's the first trade. Of course, short because the higher time frame is bearish. Here we go. That's as quick as that. We got first target. Again, the targets here are very small, 10 and 20 ticks, but that's what allows for the quick profits, I guess. Let's see if we can hit the second one here. So even though that stop loss is all the way up, okay, here's the second target. So first trade with both contracts is done, and just like that, after commissions 144, very efficient. So as I was saying, even though the stop was all the way up, as soon as the higher time frame, meaning the 1500 tick chart, as soon as that higher time frame goes bullish, the auto trader is going to take me out of a short position. So even though the stop loss is set so far away, that would not be the actual stop loss. So now that we had blue bars, as soon as bars go red again, and then there's a 15 tick pullback, there will be another short unless they rally up and then the higher time frame goes bullish. And then there would be a 15 tick pullback to the downside before a long trade is taken. So indeed, the higher time frame just went bullish. So remember that 15 tick pullback, at least the way I understand it, is being calculated from that first blue bar, which is still in the bearish side of the higher time frame. So it's not 15 tick pullback from when the higher time frame changed trends. It needs a deeper pullback to take along. And that, of course, before the higher time frame goes bearish again. Okay, so now we have red bars, which means to take a long, now bars must be blue again. And then, of course, the pullback. Okay, so here are the blue bars. And here is the pullback. And the trades are taken. Again, very quick first target. And second target. So again, there is some benefit to smaller target, especially in a very sharp, range-bound, tight market that we see today, of course, as expected with the FOMC coming in the afternoon. We're more than halfway there. So now we just gotta wait. So again, this is full automation. I do not interact. I do not put any new inputs into the auto trader. The auto trader follows the template and looks for longs and shorts both as they qualify according to the template. More often than not, this template is done within 10 or 15 minutes. So now the bars are red, so either market will continue to go lower and then the higher time frame will turn bearish, or they can turn around here while the higher time frame is still bullish, green, and then upon a pullback there's going to be another long trade. Okay, so here are blue bars. The background is still green. So now upon a pullback, there will be another long trade. Of course, there is never a guarantee that the pullback will actually happen. That's the drawback of having a pullback. There was a comment in yesterday's video, why deal with pullbacks, or why even deal with limit orders? I mean, if you want to be in a trade, isn't it better to take a market order? Well, sure, if you have a market order, you're guaranteed to be in the trade as long as it qualifies. The thing is, you can have pretty bad slippage. And here is the trade after a pullback. And that slippage, believe it or not, can make a very big difference. Target 1, target 2. And you know what? I am close enough here. I am shutting down. 432 after commissions, close enough. So let me now show the clock. I think I forgot to show the clock in the template. So here's the clock. So just about 13 minutes. So 2 contracts, looking for 500, risking 500, 15 tick pullback. So very impressive performance. So still the 29th, a little more than an hour away from the FOMC announcement. This is the 10-minute chart that you've been seeing for the past 2 weeks now. Going for 1,000, risking 1,500, 2 contracts. With a 20-tick pullback. So the first qualified trade was here upon the change in a precision trend, 20-tick pullback, and done quickly. Unfortunately, just missed the second target, so it got out on the trailer here. So short of the overall, as you can see, 784 of the commissions, so missing the full target, but that's okay. On a day like today, I really cannot complain. So again, this one was in full automation as far as taking the trades. Now, of course, an hour away, there's I'm going to be flat across the board. I'm going to see what's going to happen after the announcement. But this template again just continues to do well. I think 8 days in a row now, but as I mentioned before, this kind of template is not for every account. You know what? Normally I don't do this, but I think it's important because of the size of the stop here of 1,500. I mean, obviously, eventually I will get stopped out and then it will be painful. And so you need the account size to accommodate such a large drawdown in a single day. So it's my other computer, but I'm going to show you Rhythmic Trader account. Of course, all these funded accounts, they're not connected to Ninja as such. The funding companies go through Rhythmic Trader. So I'm going to show you the account and then just make a point, and hopefully it helps some of you. Okay, so I normally don't do this for my own reasons, but this is Rhythmic Trader, and this is the $10,000, the account that I traded the 10-minute chart on. So this is today's P&L. So hopefully you can see this. It's a bit small. Hopefully it comes out. So the overall balance, as you can see, is a bit over 126. This is a $100,000 funded account. So what's going on here? So no, I did not make this full amount in July. What I do every month is I withdraw the 80% because it's 80-20 split. I withdraw just enough to leave an extra 10,000 in the account. So this $100,000 funded account always has 110,000 in it. Now, why? Because of this idea of the trailing stop, right? So I forget now. I don't remember if it's 3,000 or 3,500. That is the max on 100,000. I think it's 3,000. But in any case, so when you start with 100, the stop loss is at 97,000. As you go to 101, it's at 98. 102, it's at 99. 103, it's at 100. But then it stops, right? So as you get further away from the beginning balance, you leave yourself more room for things to go wrong without disqualifying the account. So I always make sure that I start the month with 110, which gives me $10,000 room for things to go wrong. Also, when you get to that point and you write to them, they will get rid of the daily max, right? So when you do the evaluation, you have the daily max and you have the overall max. Also, when you first start trading, it's the same thing. But as you grow the account and they see what you're doing, they see that you can be trusted, they will get rid of the daily max. And then you only have to worry about the max drawdown overall. So what I'm going to be doing end of July in a couple of days is I'm going to be withdrawing my 80%, and I'm going to make sure that the account balance as of August 1st is 110. And this gives me room for such a template like the 10-minute chart to be able to withstand a $1,500 drawdown, even a couple of days of this kind of a drawdown, without endangering the account. So I hope this helps.